Hi, it's Larry Gaines, PowerCycleTrading.com. In this video, I want to show you kind of a counter trend trade though that's based on seasonality. So I like to always follow seasonality trends. And so this chart here is a seasonality continuation chart that goes back 5 years, 15, and 30 years. So what this is showing you is the March contract for the S&P 500. And you can see here, historically, based on seasonality, the S&P 500 tends to bottom out around November the 21st. So right where that arrow is here. And then it has a pretty decent little seasonal trend up and then tops out about December the 2nd, which is today. And then it has pretty nice little potential for a pullback into bottoming out again around December the 20th. And then that's what we call the potential for a Santa Claus rally. So a lot of times this can take place and happen. This is probably a lot of seasonals based on the market being a little bit toppy, but also tax selling. Now, the other thing I like to look at is momentum, and we could start seeing, we saw this way ahead of time. So we were watching the seasonals last week and we were looking at the potential for it to peak here, and then we picked a time to enter a trade short using the SPY and using a really low risk trade called the option butterfly. So let's take a look at the next step. So then we were looking for the potential seasonal kind of a topping out pattern, and so we were looking all last week. So here was on Wednesday going into the day before Thanksgiving. So we were looking at here, we could see that there's a high probability from that seasonality chart for the markets to kind of stall out. So we picked a perfect location right here. We started getting reversal signals here on the 30-minute, and here's the 1 hour. So this was coming around the 27th. So that was going into the close on last Wednesday, the 27th, and the next day was a Thanksgiving holiday. And then you can see what started happening, today started getting a big pullback. So you can see momentum was definitely given the direction to the downside. Cycle 1 and 2 are negative, and you can see that cycle 1 and 2 were going negative last week, starting with right around Thursday, and then Friday really started to turn down to the downside. So based on that, we did a really nice trade setup for SPY, and we used a butterfly for very low at risk, but a potential for big profit or return on your capital at risk. So let's take a look at the spread. So did a butterfly trade setup, and this is very, very low risk again. So did the December 6th, that's this Friday, 314, 311, 308, targeting that 311 area where we did actually hit today. So today it wasn't going to be max profit because you really needed to be an expiration, but this still went out with a really good return on our capital. So just one contract at $29 was up $48, $49. So you can see that's a return of about 168% return. So profit of 48 on one contract. Contract cost 69. So if you did 10, that'd be $480. So that was the trade setup based on that seasonality for potential for it to turn down, and then using our momentum indicators for giving us good precision entry. And you can see here, this is my message log for our alert service. So we actually text this trade out last week, Wednesday the 27th. So this is GMT. So that was around 242 Central. So that 2042 is 242 Central. And so here you can see the trade setup that was text out. SPY counter trend short trade based on seasonality, trading at 315.33. Butterfly trade for this week, 314.11, 308 at 30 cents or lower. And that's what we had it on, 29 cents, and had a nice profit take today. Hope this helps. I'll talk to you on my next video update.